We are now going to look at the three examples of transactions under cash and accruals basis of accounting. Firstly, the purchase of a bus, which is a fixed asset. Let us assume the government buys a bus for 25 million naira in 2025. The bus is expected to be usable for 20 years and have a residual value, that is, its value in 20 years of 5 million naira. Under the cash basis, assuming all of the 25 million naira purchase cost was paid in 2025, the expenditure for 2025 would be 25 million naira, as this is when the funds flowed out. Under the accrual basis, expenditure will be recorded through depreciation of the value of the bus over its 20-year lifetime. Since the purchase price of 25 million has an estimated residual value of 5 million naira and has a life of 20 years, we would expect to depreciate the value of the asset by 1 million naira per year. So in 2025, the value of the expenditure would be 1 million naira under accrual basis. This is vastly different from the 25 million under the cash basis. Let us now consider an example of recurrent expenditure. Let's assume the government uses the services of a consultant in November and December 2024 to prepare a report. The report is delivered to the government on 31st December. The consultant submits an invoice which is paid on the 28th of February 2025. Under the cash basis, the expenditure is recorded in 2025, and this is the point at which the invoice is paid. That is, the money flows out of the government bank account. Under accruals, the expenditure is recorded in 2024 because this is the point at which the service was consumed by the government. So in this example, the value and nature of the transaction are the same. It is just the period when it is recorded that changes. Finally, we'll look at the different treatments of revenues. Let's take a company that has a financial year running from 1st January to 31st December, which is the same as the government financial year. During the year 2024, the company makes a profit of 20 million naira and is liable for company's income tax of 5 million naira. It will be paid on the 20th of June 2025. Under the cash basis or accounting, the revenue will be recognized in 2025 when the tax bill is paid. However, under accrual, since the tax relates to the activities of the firm in 2024, the tax receipt will be recorded in 2024. As with the recurrent expenditure example, the value and nature of the transaction are the same. It is just the time period when it is recorded that changes. As you will have seen from these examples, the value, nature, and timing of transactions are very different between cash and accruals basis, particularly for capital expenditure. So it is very important that when you are looking at budgets and financial statements, you are aware the basis being presented. A key point to note as we wrap up this session is that regardless of whether a state is operating on a cash or an accrual basis, there is still a need to focus cash flows. I will now hand you over back to Real One, Ope, to take you through the final two topics, those being budgeting techniques and other PFN concepts and terms.